Hi guys, so I just wanted to jump on and do a quick it's sort of like market structure with supply and demand, and just really like the best places to take trades and maybe why you wouldn't want to take trades in some places. So it's more like the higher time frame stuff, so just the 4 hour and the 15. So what I've actually done is I've just run through a bit of price from that's towards the end of February. I've just gone through it quickly, so my markups are still on there, just because it took me, I don't know, 45 minutes to go through it all, and just sort of methodically think about it. So yeah, I just thought instead of doing that all on a YouTube video, which would take quite a while, I'll just run through it first, and then I can just sort of talk through price. I'll still click through, but yeah, I'll just sort of talk through it as if I was doing it how I just did. And basically exactly my thought process for everything. So I think I started price about like this. Yeah, it's about here. So my overall sort of theory for this bit was, if we look on the 4 hour, we've just nearly tapped this demand zone. You could probably say that we've tapped it if you include the high of this wick, but it was a daily demand zone and we didn't quite touch it there. So obviously we've had this massive wick rejection off that zone, or near enough that zone, which I've refined to this 15-minute candle. So yeah, price pushes up. There wasn't really an opportunity for shorts here because it does only come off this wick, which isn't really the cleanest. It's the first level of respect, so it's a level that we can say, okay, supply is starting to take control again, but it's not really something that you'd want to trade off. Opportunities for trading, taking shorts from here would be this extreme, or sort of this wick that's swept this level here. So that was sort of what I was looking for, and we're not actually confirmed sort of bearish again until we take this minor structural low. So we don't quite take that low yet. We get the wick, but it's not actually a structural break. So what I'd class that as is just a sweep of liquidity for now. And then we do eventually, so yeah, we wick it again, taking more liquidity, and then we do eventually get to there. So this wick, because it's swept liquidity here, so an inside buy is a range and a lower time frame. Price sort of pushes up, closes there, pushes down, pushes up again, closes there, wicks these levels, takes the liquidity from there, and then we get this sort of big push to the downside. It's not broken structure, so we're not quite confirmed to be bearish, but if you wanted to get in a trade, I don't think you would this late on a Friday, to be honest, but if you wanted to get in a trade, this is definitely sort of a valid level to be looking for trades. But like I said, I'm not sure if I would, to be honest. Target for that would probably just be, yeah, this demand level here. Just going to quickly draw it on, just because it's part of a demand chain. So yeah, what you've got is this wick, this whole candle. Yeah, so we get a wick below, but that, like I say, is just a liquidity sweep. I wouldn't class that as but demand has failed, but until we get a body closure sort of below one of these levels, it's not confirmed failed, it's just a liquidity sweep. So yeah, price is just between these two supply and demand zones right now, so you wouldn't want to be holding this and thinking, okay, price is just immediately going to come straight back down there, because it doesn't always work like that. You'd at least want to take a portion of your position here, say, you know, take your risk off at 1 to 4, whatever you do, or break even at the last level of demand, whatever way you use to break even. I'm not going to go into entry models on this because it will just take forever. I might do another video with this markup on breaking down entry models and how you could have looked to get in the market at these levels, because you can only take a trade here if it sets up on, you know, the lower time frames. So yeah, I'd at least take 50% of the trade there, and then potentially let the rest run. It's really up to you. So price comes again, mitigates this wick. So realistically, shorts are valid from there, but what we're doing is just building liquidity. Again, you've got the demand chain, so you wouldn't really want to hold it. You could look for a trade there if order flow shifts on the lower time frame. We've not really taken any liquidity. It's my only sort of issue with this level. But yeah, it's oh, okay. I forgot. So yeah, I think this was I think this was a candle that's over the weekend that they filled. I think this was a gap when it actually happened. But yeah, so price obviously smashes down. I think this was to do with the Russia-Ukraine news. Yeah, so this was coming into Monday. This was a bit confusing because I was like, right, okay, we've got this massive imbalance, but we've also broke structure. So what are we realistically going to be looking to do? So I think on the Monday I'll just really set out, but it's always good to go back through price and just see where you could have got in and opportunities that you potentially missed. So we've got no real conviction in price yet. We've got a bit of bullish price action, but until the demand level really starts to hold or supply fails, you don't want to be sort of looking for longs, to be honest. Yeah, so what we have here is a liquidity sweep. So price reacts off this inside bar, which is it's a valid demand level because it's an inside bar range on a lower time frame. So we get the reaction, we push up, push down, push up, push down. Eventually we sweep this low. So if this supply level fails, which it has now, then you can look to long off either one of these two. The extreme is always valid, and because it's a liquidity POI, makes it a higher probability, but you have also got this inside bar flip level, and because this is swept, you don't necessarily need any liquidity to be swept at that level there. So as you can see, I've circled it, so I'm just going to skip forward. Yeah, so longs are definitely valid from this area with a realistic target, because the highs are, they're not, we haven't had a break above these highs yet, but they're getting wicked, so they're becoming weaker. So this is a weak high because it failed to take this low. So targets for this, really you want to be targeting at least these highs, potentially this supply chain, because there's a lot of liquidity built up of this supply chain. Do we touch that? Maybe just about. Yeah. So again, if price sets up at this level, you can certainly look to short it, because sort of minor structure is bullish, and demand has taken over. You probably wouldn't want to just look to short off the first 1 minute chuck. You'd want to see a 1 minute level of respect, demand failing, so some sort of liquidity being taken, because in this level for this supply zone, we haven't actually taken any liquidity. What am I doing? That's not box. Yeah, so I'd want to see. So let's just. I think that touches maybe just about, yeah, maybe about a tick. So I need to see realistically this level get taken if I wanted to short from there. So we've swept that now. But yeah, you're not going to get a setup in there. So price takes at that level, which is what we want to see. We've taken some liquidity. So if I just skip forward, yeah. So shorts from this level would be valid, because not only have we taken the liquidity from here and here, but we've also swept this as well and tapped into what is really the extreme of supply. So shorts are definitely valid from that level, because we are in the supply extreme, which is always at, probably one of the highest probability levels you can get. We've taken liquidity, which is what I want to see before I trade. We're in the extreme of supply. The only thing we haven't got is a flip yet, so you'd want to be watching for some sort of interaction between supply and demand for that to flip. So we've not taken this low, which if you was in a position here, you'd probably be a bit sort of worried about. You could just take a short to, I don't know, maybe this wick here. That would have been unmitigated. It wouldn't be a very big trade, but your probably best bet would be to sit out of this because it's quite rangy. Yeah, I probably wouldn't have got involved in that, but it is valid. So I'll probably get more involved in something up here. I wouldn't be trading around here because it's just way past my bedtime. No, it's out my trading session times. I don't really trade. I'll trade up until about 8 PM if a trade sets up, but I'll only be on my computer till maybe 4, 5 PM. They're just the hours that I like to trade. It gets spread hours, the Asian session as well, which is through the night. I don't want to be up all night, trading. There's plenty of opportunities in a week and even in a day to not need to be up all the time. But yeah, anyway, so we take out this structural high now, and yeah, this supply has failed. But like I said previously, it's only a wick. It's not a body closure. So what that suggests to me is it's just a liquidity sweep. Price needed more liquidity to be able to continue with this move. So it builds liquidity, it takes liquidity, and then we go short. Lots of people would have got in here, and there'd probably be some valid setups, but we need to take some, some real form of liquidity, some structural liquidity, which would be this, or even, if we took this, I'd still be happy to short because it's just liquidity. As long as we didn't get a body closure and any conviction, and the lower time frame sets up, I'll be happy to short that all day. So pretty much straight away here you could look for shorts, but yeah, you'd ideally want to wait until price gets back to this level, or here I'll skip it forward a bit. So this is what you want to see. So what we've got here is this demand level gives a reaction here. So we've got these sell to buy wicks that on a lower time frame would be a valid supply zone. So yeah, if we just look on the 5 minute, it makes it a bit easier to see. So on the 5 minute, you've got this inside bar and what's really a range. So I said pretty much in this situation, we've got a valid demand zone, and it's a demand zone because it's an inside bar, and we can also see it gives the reaction. But we've got no liquidity for this supply zone up here. Now it has technically already been mitigated because we push away, we come back in. But I said, okay, we could just build some liquidity, mitigate this again, and then move off, or we could play off this, what's essentially a flip zone. So yeah, flip zones are definitely always valid. I don't usually trade sell to buy wicks or buy to sell wicks, but in this instance it would be very valid. It's quite a large zone, to be fair. If it was something more like, I don't know, these wicks here, I'm not sure if I would trade off that. But it's just justifying the reaction. So I'm just saying, okay, why is price stopped here and pushed up? Well, we've got this inside bar and a range on a lower time frame. But this is quite a large zone. Yeah, about 7.5 pips. So it's definitely valid to take shorts from. I haven't been on the 4 hour much. Let me just, so the 4 hours basically just ranging. So we put a low, put in a high, put in a low, put in a high, but we failed to take out this high. So that's another signifier of lower prices, sorry. So there's not really much to see on the 4 hour, to be honest. So we've got this low that gets wicked for now. Price pushes into here, and what this is the start of a supply chain. You can see I've marked it on already. But again, inside bar, valid supply zone again. So forget to turn off fucking phone up. So yeah, when price comes back into this, you can pretty much just look for shorts, as long as they're set up on the lower time frame. Obviously, this would probably be a better level, because you come back out, test it again. There's like a tiny sweep there. Yeah, let me just. Okay. So after this big impulsive push to the downside, actually, so I mean, so far this week it's Monday, so you've got 1, 2, possibly 2 positions on Monday. Even if you've just got sort of 1, that would be fine. Tuesday does usually like to take out Monday's gains, so Monday we start pretty much here, or no, it's here. We push up. Tuesday takes out Monday's high and then takes out Monday's low, which it quite often likes to do. So we took out this demand level, but so we used this inducement, we used all this liquidity in the push, and it didn't do anything. It didn't get any sort of reversal. There wasn't any bearish bullish price action from it. Sorry. We took this level, and actually we mitigated. I think this was a daily or 4 hour, I can't remember. It's quite far back. So yeah, after we've taken this, we can expect to pull back anyway, with the confirmation that we've mitigated a high time frame demand zone. So what I said was, well, this is the high of this sort of little range. So until we take that high, it's not confirmed that we're going to sort of switch. So we take this high with a body closure, which is what you'd want to see ideally before sort of taking any longs. We've come into this demand, we get a tiny reaction, price just pushes straight through. You wouldn't really want to take any trades from here. So we've got a bit of conviction. This just signifies price wants to trade higher. It's not the greatest because it's 4 hour structure, not 4 hour structure, it's not 4 hour structure, sorry. Yeah, let me skip it through to where something happens. So we deeper mitigate this zone, and then what we've got here is, so we've got this supply zone, we've got the reaction to the supply zone, and then we sweep the reaction to supply. So I wouldn't trade off this, but it's definitely valid. I know a lot of people do tend to trade like this, so get a trade there. Like I said, I probably wouldn't, just personally. Yeah, then this is the, what day is this? This will be Thursday now, maybe. I don't know. Oh. Yeah, so the price action for this isn't the best because we are stuck just sort of between this range. But what I sometimes do in the range is just go from the high to the low, and this is what's known as the EQ, or the equilibrium. Don't know if I said that right. But it's basically, this is where the smart money concepts come in, because smart money buys in the discount and sells in the premium. So anything above this line, ideally you'd want to take shorts from. Anything below you'd want to long from. It doesn't always work like that. And just more granularly, so on this would be between this and this range, the high and the low. This is more of like the 4 hour range. Yeah, so for this I was thinking, okay, well, we've not swept any liquidity yet. There's the sweep of liquidity. Here's the first reaction to demand. So this is the extreme, which is also a flip, and it's swept liquidity, so it's extremely valid. But then what happens after? So let me just put that. So that's swept there. So we get this reaction. There's your reaction. We pushed up, we pushed down. Demand then fails. This is an indication that price does want to trade lower. Along with this would be sort of like a minor breaker structure. We don't get the body close until this candle, but after this wick and the demand has failed, this is when we can start looking to short. So this is valid because it's a flip zone, but the extreme is always valid. Because the extreme swept liquidity, the flip doesn't necessarily need to. So providing you get the setup on a lower time frame, you know, shorts are probably the most favourable from where we are now, because this swept liquidity, it swept the reaction from the flip, but it left sort of an inside bar and equal highs. So you'd probably want to wait to see that get taken, which will be equal highs on, you know, every time frame regardless. Well, sort of the lower time frames to this, sorry. Yeah, so getting in anywhere here would be valid. We get a little reaction to demand, so another flip zone. Yeah, so until we break sort of this high, we won't be confirmed bullish, so shorts are still valid, even though we're in a demand zone. Yeah, so taking shorts from here, providing again they set up on the lower time frame, valid. Yeah, so what I was thinking with this level here, this was probably a better level to trade from than this, just because with this we're in, you know, we've just come off a high time frame demand zone. We could always just, you know, come off its inside bar and then continue up. Even if the lower time frame sets up, it can sometimes set up and then you still get taken out and price continues up, because we've got this unmitigated zone above. We've not taken any liquidity, and we are reacting off this inside bar. So what you probably want to do with this, I mean, I don't think I'll be trading this because it's in the Asia session, is there's no liquidity built here, hence why I got the box. So I'd want to see this level taken, and then sort of bearish price action to take over again. So we sweep this, which is what I'd want to see, and then we come back into sort of this supply. Oh yeah, one more. And then we push away, and then when we come back into this supply, it's risky because, like I said, we are ranging between supply and demand, but supply is holding. So we've got a demand failure there. We've got this inside bar, which is technically demand, which is a failure as well. It'd be more clear on a lower time frame, but this is more just to get the higher time frame intentions. So yeah, yeah, so this would probably be the best entry on this wick, but it's risky again. Like I say, you'd probably be better off getting a position up here somewhere and just holding. You could take all of the position there. I wouldn't expect perhaps this level to hold and be the best, just because it is internal range liquidity. Once these demand zones here start failing, this is just a catalyst for a pullback, and what's it called? Yeah, like internal range liquidity. So we'd expect this to go and see lower prices. So if you can get in at any one of these, you can really hold, just because. So internal range liquidity is basically just liquidity within sort of a range. So this is the high, this is the low of this range. Once these first demand levels start failing here, where's this? So this is demand, this is demand, this whole candle here, this is demand. When these levels start to fail, you wouldn't expect any of these to hold, because they just become liquidity. So what this whole price range here is doing is just building liquidity. So we get the initial reaction, which is here. We pull back, price does come into this like buy to sell wick candle thing, whatever, and then but we obviously get this demand reaction. Supply continues to hold, and then we break demand, we break this demand here fails as well. So opportunities from here are going to be your best bet. This is a bit premature, and it's not the highest probability, but this, because we swept liquidity there, we get this reaction to this wick. This is going to be your best bet, any of these. But yeah, let's just carry on. So if you got in there, would have put you in a good position. You can take continuations from like these ranges because they're 15-minute POIs. So when price comes out and comes back in, it's valid. Yeah, and then price just pretty much melts to where we are now. So yeah, ranging price is confusing, but as long as you sort of put market structure with supply and demand, so until this level, supply has been in control, so we wouldn't really expect supply to start failing until it does. So you could argue that this is a supply zone. Supply then fails, but all that is just liquidity. So it's taken some liquidity, mitigated this, and then started to move back to the downside. We never really break above this high, and if we did, I'd say, you know, that's bullish price action. Even if we broke above, come down, and then I'd be saying, even though we've come back down, it would only be to mitigate a demand zone. So you've got to look at it more on like a fractal perspective, and look at it a bit more methodically. So we've got this chain there which just builds liquidity, obviously gets taken. We started putting in bullish price action when this high goes, but that's, you know, because we've got to get back to some sort of supply zone. So the only way we're going to do that is by putting in bullish price action and demand takes control. But then we get back to supply, and when we've taken some liquidity, supply takes over again. So all of these areas are valid, but it's just, you've got to think about, okay, well, this is the low. It's only a minor low, but it is a valid low. This goes, so that's the first intention that price wants to trade lower. We've got this interaction between supply and demand, which gives these wicks. Okay, wicks aren't the best, and probably 90% of the time I don't trade off them. But you've got to just say, is that what price is going to react to, or are we going to get a reaction to something else? Because it could have come to this extreme, and that too would have been valid. Yeah, this is an inside bar. They're always valid, and because now price is putting in bearish price action again, supply has taken control of the market. You get this like demand failure there as well. So you've got to just look at, where are my reactions, what is price reacting to, and who is in control. So yeah, like this is a really valid level to take shorts from. Obviously it never comes back, and you can't just sit here and think, okay, we've had this push, I'm just going to wait for price to get back to there, because it doesn't, a lot of the time it doesn't actually work like that. Price won't come back to you know, the extremes. On GU it likes to come back to the extremes more than EU, but it does just, you know, mitigate these wicks there, which probably reacts from something here. Yeah, so you got wicks. Oh, it's actually, yeah, it'll be, so this demand zone gives this reaction, which price then obviously respects that reaction. This gets wicked, which is what I'd want to see, because there's no liquidity there. So to sort of fund this move, we need to take some form of liquidity. These lows start to go, another indication the price wants to trade lower. So it's just about, you know, thinking about it, yeah, like fractally, saying why has price reacted to, you know, this level, why has price reacted to this, and you can see that the shorts were favourable because we've been extremely bearish for a long time, and we continue to be. Let me just move this out of the way. So this is GU currently, and as you can see, it's extremely rangy. I'll probably do a video on this at some point in the future, maybe next week, and I'll do a video going over, I won't be able to get entries there because it's too far away, but I'll do a video where I'll do something similar to this. I'll map out the market structure and twos and control and stuff, and then get the entries as well. Peace.